Billy. I'm really glad that you were able to join me today. I'm looking forward to doing some videos to get out to people with 2023 right around the corner. And one of the first ones that I really want to push for people was setting their goals for 2023, right? It's New Year's, setting those goals is buying a house. And credit, I keep telling everyone, is the number one thing that drives buying a house. So this is where you come in today, because these are some of the things that I have experienced over the last year with buyers and credit issues. And one of them is some people think they have wonderful scores because they're doing Credit Karma or they're doing a monitoring system through like Capital One. And they're getting these score reports, but it seems like it's leaving out something. They're only getting one piece of the pie in terms of their credit scores. And then some people are just convinced they have bad credit, that they shouldn't even try, that there's just no hope, and their head is in the sand. And then I have people that are just worried about having their credit ran because it's going to make this big impact. They want to wait till they find the house they love, then run their credit. And I keep telling them, there's reasons why not to. So let's talk about what you guys provide.
Well, the first thing I want to touch is what you referenced with Credit Karma and then the credit monitoring systems. These are typically consumer applications, and they're going to show the consumer report. And that's very different than what we're looking at. We're looking at it from a mortgage company. So it's not unusual for a customer or a client, a prospective home buyer will contact me with an expressed interest in becoming pre-approved to purchase a house. And they'll share with me pretty quickly, hey, look, I'm really proud of my credit score. It's a 735 and I've got outstanding credit. And then when we pull the actual credit report, because they're using that consumer model, not the mortgage model, when we pull the credit report, what we often see is something less. And it still might be a great score. It might be 710. It might be 690. It could still be a really good score and not a score that's going to be detrimental to their approval, but it's different. It's lower in some cases, in most cases, than what they're seeing. And ultimately, that can be somewhat offensive to a home buyer or a prospective home buyer who thinks one thing and they find out ultimately something else. And that's one of the things that we do is we try to make sure that we're educating the client and explaining to them the different levels of credit scoring and models that are used when determining what type of financing, and then also what the rates in terms of the loans itself. So that's a big common conversation that I have a couple times a week.
Yes.
So, but
definitely.
Yeah, the second thing that you mentioned, which was, folks who just think they have bad credit, right? That goes from both ends of the spectrum. I talk to some people who will tell me that they have absolutely great credit, or they're not worried about their credit. And then we pull the credit score and it's actually lower than what they thought. Again, it goes back to the Credit Karma. Maybe they've got like a 625 Credit Karma score. And then when I pull their credit report, it's a 590. So if they're shooting, or they've been told, or they're educated by somebody that, hey, look, in order to be considered or eligible to be considered for financing, a 620 score is really where you want to be. And they're using that Credit Karma or that credit monitoring system. And then I pull the credit report and it turns out to be a 590. And then we've got some work to do, and we'll talk about that later. That also is a big misconception. So the bottom line is, if you know somebody or you're interested in becoming pre-approved or pre-qualified to purchase a house, and you have a time frame, whether it's immediately or whether you're looking in 6 months, it's never a bad idea to talk to a mortgage professional about your credit. Let us take a look at it and identify anything that we can do to help the loan become more approvable, or maybe even help you to secure a lower interest rate and better terms.
Right. Very important, especially if we have a couple things to take care of. You want that time period. You don't want to fall in love with the house and miss out because you didn't take the time to do this.
Right. That makes about as much sense as jumping out of an airplane with the parachute in your hands, right? Because we all know that in our industry, in the real estate world, things happen quickly. Things have to happen fast. And if we're given 30 days to get you from, contract to closing, and we've got to do all this credit repair in the middle of it to help you to become better leverage, to secure a lower rate, better terms, it's really, it makes the process a lot more difficult and a lot more stressful for everybody.
Yes, absolutely. Well, I'm excited to hear more about this program you have to help people really get in the strongest position to bid on houses and get the one they love without any disappointment.
Yeah, and we do talk to people. We're referred frequently by our real estate partners in the community, prospective home buyers who know going in that they have some credit challenges. And unfortunately, the average consumer, when they speak to a loan officer, a lot of times the loan officers really don't follow up with folks who are not ready now. You've got a lot of really short-sighted lending professionals out there, whether they're representing local companies or whether they're representing banks. They look at a file, and if there's nothing they can do, they just move on. They don't invest any time. And that's one of the things that we do that's very different than a lot of our competitors, and in particular, a lot of the online lenders and the local banks and credit unions, is we will invest our time, our energy, and work with the client to help prepare them to become ready. It's not a big surprise that some people have, what's the old saying? Bad things happen to good people. And we have a vision. We want to make sure that we're helping those people to become homeowners. And a lot of times the challenges are not that great. It takes a little bit of extra time, a little bit of extra energy. And we have a dedicated staff here to specifically work with those buyers and help prepare them and then give them guidance that they can apply to helping improve their credit scores, help improve their position for approvability, and do so whether it's a 30 or 60, 90, even 120-day plan. And then we follow up with those consumers to make sure they're following the plan that we help them with.
That is truly awesome. So show us some of the good stuff.
Yeah, absolutely. Let me go ahead and jump in real quick, and I'll share with you my screen. And we'll tap. Well, by the way, real quick, while I've got it up here, again, I'm Billy Saunders. I'm a mortgage loan officer with Caliber Home Loans. There's my contact information. If anyone watching the video wants to chat with me a little bit about this, I'm certainly readily available and happy to assist. So again, we use a program, and the program that we use is called Lending Hands. And what it is, it's a free credit repair analysis. And what we utilize is the actual credit report that we're going to pull on the consumer. And then we have all credit scoring model it's basically operates from an algorithm that analyzes things like timely payments. It analyzes late payments, derogatory items, collections, bankruptcies, foreclosures, things that could have been life-changing events that have negative impacts on credit reports. But one of the things that it really analyzes is the consumer's credit usage versus allowable balance ratios. And this is where we can really help. And I'll kind of dig in a little bit and show you how it works. So our experts at Lending Hands are going to provide a realistic score option after improving or after reviewing the credit report, and give the borrower the ideas and suggested path as to what they can do to help improve their scores. And I'm going to show you a real-time model of what we've used just to help a recent client. So if you look at your screen right now, you'll see the following credit report where we have a tri-merge credit report, meaning we've pulled all three bureaus for this particular prospective buyer. We pulled their Experian report, which came in at a 572. We pulled their TransUnion report, which was a 562. And we pulled their Equifax report, which was a 532. Now, in this example, all of these scores would certainly be too low to be given the consumer any consideration for financing. And a lot of other mortgage companies, a lot of mortgage lenders, they may have just ended the conversation here. They may not have even called the buyer back to tell them that they can't help them. They just ignore them at that point. I hear horror stories like that all the time. Well, what we do is different. Yeah, and we really dig in. And if you look right here where I've just highlighted these arrows, it shows the potential score improvement. And you can see we've got an opportunity to help the borrower with their credit score for Experian by taking it up 85 full points. TransUnion, 48 points. And Equifax, look at that, 95 points.
95. Wow.
So now the question is how do you do that, right? Now, again, this is a credit report that was pulled on August 19th of this year. We started working with this consumer. We provided them with the plan. And let's fast forward to just a few days ago. I've spoken with the consumer. We've gone over their plan. They've been keeping us updated. We've been asking them for updates. They've shared with us their progress. And look what we've got here. A credit report dated 12/13, so just 2 or 3 days ago, right? And now look at our scores. Our consumer has been fully participating in their own success, and they're following the suggested path that we created for them. And as a result, their scores have increased significantly. Our consumer now has a 623 FICO score through Experian, a 654 through TransUnion, and a 653 with Equifax. And now they've gone from somebody who could not be given consideration for mortgage financing to become a homeowner to now they're eligible to purchase a home. And that's the extra level of care that we commit towards our prospective buyers so that we can help them to achieve that goal of home ownership. And even better, if you look at this, there's still opportunity for them to increase their scores. Look at that. Now we have potential improvement, 68 points for Experian, 75 points for TransUnion, and 56 points for Equifax. And what that means to a consumer is now they're not just eligible for financing. If we can help them to improve their credit scores and get them even higher, that's going to mean that they could get better financing opportunities. They may even be eligible for programs like down payment assistance. They could be eligible for lower interest rates and better terms, lower payments. So let's take a look real quick and I'll show you, again, this is what our customer is going to see. I'm using the TransUnion application here where their current TransUnion score is a 654. If I want to get them to a 660, there is a 97% likelihood that if they follow the suggested plan and path that we place them on, that's going to help their score go above a 660. And look at that, Cecelia. It's only a $326 investment that the consumer has to apply towards an existing balance of a creditor that they currently have on their credit report. They provide us with a balance update letter showing that they've applied a $326 payment to the creditor that we're referencing, and their scores are going to 97% likelihood will increase to above a 660. How incredible is that, right?
That is amazing. And I'm sure all this costs like an arm and a leg with you guys, right?
No, it's free. It doesn't cost the consumer anything. We offer it as a free service. And just to take it a step further, if we want to get that same customer that I'm referencing a score as high as 680, now all of a sudden the cost is now greater for the consumer. They have to apply that $2,613 payment to, again, not to us. I want to be clear about that. They're not paying us. They're paying down the balance on one of their existing credit cards or credit limits. So if they pay that down by $2,613, there's a 92% likelihood that that consumer score is going to go above a 680. And again, now that opens up a world of opportunity for a buyer when they're out there looking at purchasing a home and hopefully becoming more eligible to become a homeowner, which everybody has a right and deserves to do so.
Yeah, that's great. I mean, the whole point is that they can have great financing options, better interest rate, because everyone's looking for the best interest rate right now, right?
Correct.
So they can have that lower down payment. So that's all really important. But the most important thing is they're working with a reputable company right here, Southern Maryland, right?
Yep.
See you out and about. And you're trusted and you're not charging anything. All you're doing is providing a wonderful service to help people, not think that we're at the bottom of the pool with lawyers, right?
Right, exactly.
That we really do care. We really want the best for our clients.
And like I said, it's unfortunate, and it really is. I talk to consumers on a regular basis. I'm pulling anywhere from 80 to 100 credit reports a month, so we're seeing a little bit of every walk of life. So again, bad things happen to good people. Some folks have gone through major life events, whether it's recovering from an illness, going through a divorce, loss of job. Things happen. And our job is to kind of spread hope and kind of give people an idea that they can recover from this, and in some cases it may not be as expensive or it may not be as detrimental as they think, and the idea is just being able to talk to somebody about it first and knowing that the person that you're speaking with actually cares and is willing to help, because that's the problem that we run into. So many people in my profession, unfortunately, they just cherry pick. They look at the ones that they can help now, and if they can't help you now, those customers get cast aside, and then they lose confidence. And I've had buyers say to me, well, I called somebody a month ago and they told me they never got back to me. I got a letter in the mail that says that I wasn't eligible. And that's all the communication that I had after I talked to them the first time. They were real nice until they looked at my credit report, and then they never talked to me again. Right?
Right.
Well,
Yeah, unfortunately, that the same can be said about realtors too. Oh, you have what? No, no, thank you.
we
Right.
don't work that way. Like I said, I've got a dedicated team member to my staff that this is one of her primary functions and responsibilities, is to work with our customers and help build our database and help people, whether it's, we don't have to help them right now. Maybe it's 30 days, 60 days, maybe it's a follow-up 6 months from now. I've had clients that I've worked with for at least 2 years to help get them to a position to buy. And those are the folks that are ultimately your best customers, because they're the ones that are appreciative, they're grateful. You help them to achieve something that they didn't think was possible. And as a result of that, man, they're your best, they become members of your sales team, because they're going to refer you to all their friends, their family, their coworkers. They become great referral sources because they know how hard you work for them when nobody else would invest the time and energy into it.
Absolutely. Yes. Absolutely. Well, I'm really excited about getting this video out to people so they really understand 2023 is an opportunity to be a homeowner with, the right people guiding them down that path of home ownership. And that, right here we are to help them and stuff. And I know, because we've been talking, that you guys, Caliber has some really, really exciting programs coming out for buyers.
Yeah, we really
So I'm really looking forward to hearing more about that, and that'll be our next video. And I hope we can keep pushing out great information to consumers so they can have great experiences and, have great success
and
in
become
the
homeowners.
real estate world, right?
Yeah, absolutely. It's the greatest wealth building tool in America is home ownership. And we want to make sure that we're helping as many people as we can, because everybody deserves it, quite honestly.
Absolutely.
All right.
Absolutely. Well, thank you so much, Billy. This was wonderful. And again, put your information up there for them, because this is a great program. It's free. If it takes 30 days, 60 days, a year and a half to get through it to become a homeowner, then, that's what it takes. But
Yeah,
it's
absolutely.
free and it's a trusted source. And that is what everyone should understand. You do not have to go pay to get your credit fixed.
And I'm glad you said that, Cecelia, because we do see that often. We have a lot of people who are investing $100, $200, even $500, $600 a month into these credit repair programs that they'll help a consumer get their credit score improved, but they don't necessarily improve their credit scores for the purposes of getting a mortgage. And that's where there's a difference in that. So that's a great point. And happy to share that information with anyone who's interested in learning more about it. Again, my contact information is on the screen right now. In addition, if you'd like to apply, you can visit my website at dmvloanofficer.com. Or if you just have questions and you want to go over something specific with me, because everybody has a different set of circumstances, feel free to give me a call. I'm at 301-440-9102.
That's awesome. Well, thank you, Billy, and have a wonderful afternoon.
Thanks. You too, Cecelia. It's a pleasure always. Thanks so much.